JB here. Hope everyone's doing outstanding. Wednesday, July 16th, 9:04 a.m. Talk really quick about the market. Some names I'm looking at go from there. S&P futures back into the green here this morning, about up 0.2% after yesterday's massive pullback, right? It's funny how sentiment shifts, or at least the talk on FinTwit. Like if if you look at what some folks are talking, oh, markets are heavy. And it's like they'll say it after the markets are reversed to green, Oh, yeah, we mentioned it that markets are heavy. Uh, So, I mean, not saying, I mean, markets is don't throw away from all-time high. At some point, we're gonna have a pull, right? And markets will be heavy. But I'm still on the optimistic side. Maybe we'll have some more chop here. But this morning, PPI data and cooling expectations. This is on the heels of yesterday's inflation data. And I always talk about like some people ask what's the routine in the morning, what have you. But I read publications, the Wall Street Journal, Barron's, MarketWatch, The Economist, FinTwit, CNBC. Like I look at all those things over the first half hour of the day or whatever. And there's articles that you read that just kind of like make me nuts, and I think it's important to read all varying inputs, right? Because I'm not naive enough to think I'm correct 100% of the time or I know everything or whatever. And maybe you learn some things, or maybe you confirm that you were right on something someone else is wrong, right? Whatever it is, right? That's what the market is. The market's in opinions, and whether it's the opinions to buy, not to buy, to sell, and that's where it goes. Anyway, so today it's the Wall Street Journal. If you saw me on FinTwit, just things like this just drive me nuts. So the article and yesterday's CPI data, it's dependent on who you read or what person posted, whether the CPI data showed tariffs, showed inflation accelerating, or that it was cooler than expectations. So it's like whoever decided, if someone hates Trump, it's hotter than expected, accelerating. Tariffs are showing up in numbers. If not, it's the flip side, right? And I try not to get political or have political bias. I say like, right, I don't agree with a lot of what the current president does. I didn't agree with a lot of what the previous president did, and that's just how it goes, right? It's similar to your significant other. If you sit there and you agree with every single thing that you want to agree with every single idea, view, and whatever that they have, you're probably never going to find someone, right? Just how it is. So uh, this morning, Wall Street Journal comes out with a piece that says tariffs are showing up in inflation data, and then they have a quote in the piece citing some I don't know if it was a professor or whatever. It says America's Americans as of Sunday faced a 20.6 average effective tariff rate, according to the Yale Budget Lab, the highest since 1910. So if you read that, you'd be like, oh my gosh, 20%. That's a 20% higher prices. That's pretty much what it infers or it implies, right? But like, so that's the stuff that goes around, and then you read it, and it's on the news and whatever. And then if you're the average person, you're like, oh my gosh, this is horrible. I hate this president. He's just making prices higher for us. But then that doesn't assume that what. So number one, Americans aren't facing the average 20% average effective tariff rate. The tariff rate is on the folks who want to bring products to the U.S., right? That's what a tariff is, right? Your product to come in is going to face a cost to come in, right? So in that aspect, it's already misleading at best, right? And then the other part is it like that doesn't assume that the person exporting the product to the U.S. is not going to take a chunk of that tariff rate, right? And that's not going to assume the other part, the person who's importing it is not going to offset some of that, right? With a cost. Say, hey, they work out a deal. Hey, my product's going to get tariffed 25%. I'll cover 12.5% of that. You cover the other 12.5%. Have a nice deal, right? Have a nice day. And then that doesn't include the retailer, right? The person or whoever, the cars, the retailer, whatever it is that sells the product. That doesn't say, hey, they might not offset some of that by raising the prices, by off taking some of that cost, eating some of the cost. So it's like all these different elements, but they'll just make it sound like the U.S. consumer is getting destroyed with these tariffs, right? So there was another article yesterday. I don't know if I mentioned on the rant, the CNN article around tomato prices, right? 17% tariff on tomatoes. That's not good if you think about it, because I think like 90% of the tomatoes that come into the US are from Mexico, right? But it's like a tariff on gold, like something, a finite resource. Like tomatoes are pretty easy to grow and what have. So I mean, you would have to work things out. I mean, it's not like an iPhone, right? iPhone's a totally different story. Um, but it does disrupt things, right? So if you're a restaurant or someone that has supply, needs a large supply of tomatoes, of course this is not a problem. I mean, it's a problem. I think tomatoes like $1.50 a pound, so 17%. I mean, you do the math, it was 29 cents, whatever that comes out to. So CNN goes out and interviews a restaurant and says they're going to go bankrupt in 3 months if this tariff goes into effect. I'm like, oh my gosh, 17% tariff on tomatoes is going to make you bankrupt. Maybe this is probably not the line of work you should be. I'm joking aside. I don't want to see any small business go out, but like maybe get it from somewhere else, find a different source, meet the consumer halfway on the price. There's got to be another way out. But to me, it's like CNN is going out and saying, we don't like the tariffs. Let's go and find a story that's going to confirm that, right? Let's do our confirmation bias. And so hopefully the tomato situation gets worked out, right? It brings me back to like the avocados. Oh my gosh, I remember avocado toast was so big, and they're going out and they're gonna disrupt avocado toast by the supply, whatever it was. And that was the whole big fiasco there. It's like, oh my gosh, avocado's a little different, right? You need a different environment to grow the avocados. California, Mexico, those are good environments for them. And those avocados different than tomatoes. Now they can grow millions of tomatoes and just grow plants and have them up and ready in a couple months. Avocados, like they don't grow on the first year. I don't know the exact details, but they're a different kind of product, right? All right. So end of rant. So to me, it's like that's why at April 7th with the liberation lows, we had this sell off and then we see this bounce, and you still have people who just can't believe that the markets are high, just waiting for the next shoe to drop. And at some point, maybe it does, right? I'm not going to sit here and be naive. To me, the thing that concerns me right now is this 30-year over 5%, right? Don't want to see yields continue to tick up. Today's PPI data is helping. So yields were higher this morning, and all of a sudden they reversed after the PPI data. So that's a good sign. Hopefully that starts to trend the other way. And I think now you can make that correlation with the small caps, because every time we get this big spike in yield, small caps taking on a chin, down 1.5, 1.6% yesterday. Hopefully that reverses course, right? And I keep saying about the small caps, I'm hoping they can take the reins from mega cap, the Nasdaq, and even if we just turn around here on the S&P for a while, at least maybe small caps can find some footing and rally 10%. That would be nice, right? I think that could set some things nice into the fall. All right, so that's overall market. US dollar 9 days in a row. It's a little red here this morning. Hopefully that finds some footing. Now just some individual names. So first, obviously, Serve Robotics. I just want to talk about that one just really quick. If it breaks over 11 here today, I think it's going to do what Joby's doing right now. Joby's doing some FOMO, right? People start understanding, realizing the story. Hey, this is pretty close to fruition. 2026, not that far away. Uh, this could be the next. I wouldn't even call it the next Uber. It can be, it's different, right? Different cost structure. So I think some of that's going to roll over at some point. People are going to see Serve Robotics, and Serve Robotics has the robotics play, it has the AI play, it has the last mile play, it has the Uber play, it has all that, right? And then you have an addressable market that can expand over time. So if it breaks over $11, I'm going to add some more strikes today. Really like the Serve story. I think 13.75 is the first big spot, then gap fill $18. And then Joby, right above that trend line. I mean, it could stay above for a longer period of time just because of the momentum right now. And you look around and everybody's talking about Joby. At some point, there'll be a pullback, whether it be when it's at $20 or $14.50 or $18, it's going to happen. So that's why you see me continue to scale out of some calls. I'll probably take a couple more of the August strikes out today. Of course, in hindsight, did I have a July 11s? I think I had July 11s. I think I had them at 35 cents. So those would be 10 bags right now. But at the same token, it's one of those divisive names. You trade it long enough, you've seen some ups and downs. So would not be surprised at some point it's going to pull back. Of course, I wouldn't like to see it. I'm in the calls. It's just reality. So not sure if I'll add any more strikes. I got those Octobers yesterday under the premise that if it does pull, I'll be able to get some more. I just don't want to be in a spot where I don't have, uh, you know, uh, major, I wouldn't say major exposure, but further out exposure. So love Joby. Not going to talk too much about that. But again, once this takes off, it's already taken off, but it can continue to have outperformance for a substantial period of time as from what takes off. TTD, what a monster yesterday. Great start to the week. Had on the game play 85.18 was the February lows. February highs it hit back after its earnings. I use that as like a key spot. If you couldn't break over and hold that, I'd close out all the calls. But the premise was to close some out at the open. I did that for over 1,000%, then all the way up to 86, and then just couldn't find support under 85. So I closed the last out for over 900%. At some point, I'll look to revisit. I don't know if maybe I'll wait for the dust to settle on this S&P 500 edition. But that's another name that's kind of like beaten up from earnings, similar to like MDB, right? And hasn't really had a chance to break out. So at some point, I think the next earnings will be the catalyst. So MDB, add some spec lotto calls. It's like the second or third time I've done it. At some point, I think this revisits the 230 handle from its earnings. I'm surprised it hasn't already. Um, I think it reports later in like August, right? So uh, if it shows some strength here today over 212 or so, I think 212.39 was a high yesterday. I'll look to get some more strikes into next week. I think it's a matter of time. This is a volatile name, so it's had its ups and downs over the years. And when it has its downs, it's a big to the downside. When it has its ups, it's big to the upside. Um, really like this one. And then just some other names. TripAdvisor got to close the last of my July 17s. Hopefully I get a chance here today. I'm just waiting for it to either break out or to pull back, and then I'll close them out and add some more strikes. Still have those September strikes as well. I might look for some more Septembers today. Only a matter of time before that Starboard letter comes out. I keep saying that, but at some point that's going to happen. And then some other, still looking at Dexcom here, so tight. At some point that one's going to break out. And then some of these small cap bios, I've been talking about those the last couple weeks or so, but Edit has come off its highs, so maybe at some point I'll look to visit that one. Turn is at $5. It's been holding there, so it's actually at 507 here in the pre-market. One of those days I'll add that. And the other thing is maybe VKTX sets the whole GLP-1 space back on fire when they report data in the coming weeks, right? So, all right, let's have a great day. I'll be back on audio later. Rock and roll.